The price of oil is rising after this weekend's attacks on Libya. Stocks and commodities gaining as well after Japan reported progress at the earthquake-damaged nuclear plant. Francisco Blanch is with me now. He is the head of global commodity research at Bank of America-Merrill Lynch. Glad to have you in the studio, in the newsroom with us, Francisco. Just how high can oil go given all the events that are happening right now?
Well, look, I think it depends a little bit how much supply we lose. But with the existing supply losses and some turmoil and the potential ramp up in demand, I'd say about $140 a barrel over the next 3 or 4 months.
So we could go back to July 2008.
Just a little bit below that. But remember, since then, the global economy has expanded a little bit. We've had some inflation. We've had some dollar depreciation. So net, it will not feel as high as it was back then. So.
You mentioned if supply is taken off from Libya. What are the chances on a scale of 1 to 10 that really we get no production out of Libya, right?
Well, I mean, it's hard to judge, but I think certainly the decision by the United Nations Security Council has certainly extended the conflict, because clearly Gaddafi forces were moving into the western side of the country, and effectively the decision has extended it maybe another 6 months. So we're going to be missing Libyan oil for a while.
Saudi Arabia said it's going to pump and produce more, but it doesn't have that golden light sweet crude that Libya does have.
That is a challenge. I mean, Saudi is trying to create some mixes by altering the various elements in their crude to make it a little bit lighter, a little bit sweeter. But at the end of the day, it is going to be relatively tight. And remember, Saudi also has a lot of demand domestically throughout the summer window, because they use a lot of oil for power generation. They have a lot of air conditioning units right now. So as we go into the summer months, into the June, July months, we will see a pickup in Saudi Arabian demand, pretty strong pickup. Okay,
now I just want to clarify, so you would not be surprised at all if we hit 140 a barrel in the next few months?
I wouldn't be surprised. Look, I mean, we are. It looks like Yemen is also under a heavy amount of turmoil. I'm not sure how long President Saleh has in power. It looks like he's counting the days now. We have the issues in Bahrain. Still haven't seen much of a reaction from the Western nations, from the U.S., the U.K., from France, on what's happening in Bahrain.
There's a lot of instability out there.
There's a lot of instability, and look, I mean, Iran's also out there and trying to exert more regional influence, and this is a perfect time. If you're Iran, you're thinking, well, maybe it's a good time to go in and try to
flex some muscle.
Flex some muscle, right?
So you mentioned air conditioning, which makes me think of natural gas. Right. To what extent are you watching natural gas? Because these prices are moving higher as well as an alternative energy source.
Right. Look, I mean, I think the U.S. remains a little bit of a gas island. We've seen a bit of a bounce in U.S. natural gas prices, but for the most part, the U.S. remains very much decoupled from what's happening in Europe and in Asia. Remember, Asia and Europe are heavily exposed to what's called oil index gas prices. That is, the gas prices sold into Europe by Russia, by Norway. Some of the LNG, the liquid gas sold in Japan is linked to oil, right? So as a result, the Europeans and the Asians are paying $12, $11, $13 per MMBTU for their gas, while we're still paying $4 per MMBTU here. So,
what does it mean for natural gas prices, though? How high could they go?
I think natural gas prices can see some upside throughout the summer months and maybe also into the next winter. But I'm talking about global LNG prices. U.S., I think, still remain decoupled. I don't see a lot of upside pressure in the U.S. for the time being. Over the medium term, however, we will see stronger demand, right? I mean, this is a short-term event, right? So we will see strong demand for natural gas in the short run to fill those nuclear power units that have been left idle. But over the medium term, we will see a lot more demand for natural gas. The nuclear events in Japan are going to push, are going to tilt the needle towards natural gas, no doubt about it.
All right, we've talked about oil, we've talked about natural gas. Right. Gold, obviously also rising. These are our three main screens right now. Right. How high can gold go?
Well, look, I mean, I think gold, we have a target of $1,500 per ounce for October of this year. We've had it since, I believe, October of 2008, so it's been a 3-year target. And this last run-up in gold has been first and foremost driven by oil. So if oil continues to go higher, if we see oil at 130, 135, getting close to 140.
Are you going to move your gold target higher?
No, I think gold is going to go to 1,500, right? I mean, I'm not ready to move it higher. I think for gold to go a lot higher, you're going to need some form of QE3, which I don't think we are there yet.
Okay, Francisco, thanks very much for coming in. Francisco Blanch joining us there. He is head of global commodity research at Bank of America-Merrill Lynch.